let's begin this month's talk on the forecast of July. Very soon, we are already in the half year, and I think this is our 12th series of the talk ever since we started last year in June. Okay,
it's 13.
13 already. Okay, it's
Yeah.
1 year already. We should celebrate the 1 year anniversary. Yay! Okay, so yes, and I would like to thank all the members and all the people here for supporting this talk, this platform of global trends and astrology forecast. Without you, we will not have gone this far for 1 year, and we hope we will be able to, continue this platform for many, many years to come. Okay, as long as both PC and I are still able.
Yeah.
Okay.
As long as you help us, then we won't grow old and senile. So continue to support us.
Yeah, that's right. We try on the energy of our audience. With each other, we will transpire positive energy to each other. We are in the second half of the year already, officially. We have just passed summer solstice on, I think, June 21st, if I'm not mistaken. I think it's June 21st or 22nd, okay? Just 1 day before the Tuan Wu Jie, the dumpling festival, the dragon boat festival, there was the summer solstice, and it officially, in the solar calendar, it officially marks the half year, okay? So the second half of the year is going to be, I promise you, the second half of the year is going to be even more exciting in the global trend, the global scenario, okay? Whether good or bad, depends on how you use the information that we presented here, okay? So in this July's energy is about growth and also growing upwards, right, to lead to in that could potentially lead to imbalance. Our talk is actually applying Chinese astrology and trend research, Chinese astrology by me and trend research by PC Wong to focus on the economic and the financial geopolitical events and helps you to make better investment decision, because how the market performs will really impacted by 3 of these main factors. This is how we relate, okay? And today's agenda is on, as usual, we will start with the introduction we have just done, later on the disclaimer, and then a brief recap of last month's forecast, the influence that we have in the coming month in July itself, what is the energy, and also, let me just move this over. And also the geopolitical financial forecast by PC Wong, and the summary of what is expected in July at the end of this talk, okay? So the disclaimer here, I would like to put in, reinforce, the content that we presented here is purely based on our studies in the global trends and also the relationship of the 5 elements in Chinese astrology, which you can use as a guide in your investment decision. However, you will need to exercise caution in investment, especially in such volatile situation, and do your research on the company that you want to invest. There will not be any stock advice given in this platform, okay? So let's briefly recap what is happening in the month of June. I think the month of June is also quite exciting. We have the year pillar of Kui Mao here, and also the mountain, the Wu. Actually, Wu and Kui is a combination, and that's why you can see a lot of unrest here, okay, with the combination of the people, and also the Wu here represents the government, and also the Wu here is the fire, so related to financial as well for this year. So you can see the demonstration as we go through the news. The demonstration against government has intensified also. Then the government are trying to collaborate in the surface. Let's see after I show you the headline how they are trying to collaborate on the surface. And also I stated that a stock market drop. I think the beginning of June has been very, optimistic. The stock market has been quite optimistic in the early part of the June, but now I think the momentum starts to wear off and things, starts to drop and more layoff is happening. And this one will plant a seed where the energy sector will also gain some attention. And in June, the lesson here in this cauldron means that there will be a transformation, okay? A transformation that's happening as well.
I think the greatest transformation we see is the Pride Month, the woke culture and such now is transforming across major Western cities. They have this June, what they call the Pride Month. And it's really something that, that highlights the decline of the moral values of the population.
Okay, yes, that's right. So the government trying to collaborate on the surface. We can see a lot of things happening. South Korea is trying to sort of, cooperate with Russia. And then the cooperation between Xi Jinping and also Bill Gates that visited China as well. Okay, and it seems that maybe the inflation has sort of cool off to 4% compared to I think at its highest almost a double digit, if I'm not mistaken.
Yeah, it's almost 9%.
Yeah, it's almost 9% at one point of the time, beginning of the year, if I'm not mistaken. And then also property, we can see that home foreclosures is rising as expected of the, of the current inflation, of the current income that, a lot of people having problems in paying off the installment. Okay. And also a lot of unrest that is happening that, people are celebrating all these equality sort of things, LGBT movements, and then also people are killed, mass shooting in France that are stabbing critical, that people stabbing on the child victims. I'm sorry to hear that. And also same-sex marriage with the more and more awareness of the LGBT movement. This is actually one of the symptoms into the next 20 years. We started actually.
I think pretty soon it won't be LGBTQ, it will be QWERTY.
Yes, it will be worse.
Because they eventually will identify more alphabets than in the keyboard, for all their misgendering.
Yeah, and also the hashtag #MeToo. When the hashtag #MeToo, I think first appeared in 2017, there was already the transition year into the period 9 already. The next 20 years already is a transition time already. And now it will not go away. It will become even more stronger because I think recently also Taiwan, has the hashtag #MeToo sort of experience from a Netflix drama on, Taiwan political parties and all these things. So you can see that this type of movement will only strengthen, okay? And it will definitely impact the geopolitical landscape in the future. And also AIs, we can see that AIs will continue to dominate now, okay, into the future, okay? So I think all these happenings and all the dollarization and what we have written in the book is actually truly now happened. We wrote the book about about half a year or more than half a year ago, about 8 to 9 months ago. And we have predicted all these are already coming, at least to the 80%. So for those of y'all who are still interested to know what the year has unfolded to you, you can really go and get this book and read what is happening, what will be happening in the future, in the next 6 months. At least it will give you a snapshot and also give you a more educated or more research-based knowledge for you to make a financial decision, financial-related decision. Because after all, our book are written with the financial geopoliticals and also investors in mind.
I think we also wrote in regarding the fire element that we will see China continue to excel in its being sanctioned from access to high technology. China will embark on its own self-determination, and recently I read news that China's EDA, those equipment for manufacturing chips here, they are growing quite fast, and one of the company, Imperium Technology, in their Q1 announcement, they say that they are ready to tackle 7 nanometer.
Yeah, okay, that's right. Plus, actually, China is trying to build their own ecosystem for the chip manufacturing, because they realize that how important chips and electronics products will be in the future. Because without all these hardwares, you will not have AIs, you will not have virtual reality. That is the fact.
Yeah, and there's also a branching off between the AI between US and China. Those who have followed our webinar last month, we mentioned that China is embarking on AI for manufacturing, whereas US is embarking on AI as a service. So two different schools of thought. But I think eventually manufacturing is what will triumph, mainly because you are producing real goods. Okay, service is still something that will help industry, but without a manufacturing base and without a production base, then it wouldn't help the economy to grow as strong. So that's why achieving manufacturing capabilities is actually primary to developing a very strong economy.
Exactly. Yeah, that's right. And also, I would believe that China is going towards the direction of manufacturing. After all, they already have many years of experience in manufacturing. So the next phase will be, to a higher level. Okay, let's go through the month of July's energy. Okay, July's energy is also a pure earth in terms of the month, branch and stems, where both are earth. Okay, and in the year pillar, earth actually is a contamination of problem to the water. And this year, I think every one of us in the day pillars is also koi, is also water. So this earth comes in, means that more problem for the for people on earth generally. Okay. So in terms of pure earth energy, also property is also represented by earth. It will have challenges. The fire in the chart, if you remember, or you can refer back to our book, that this year the Li Chun chart is actually very dominated in fire. So the fire will even create more earth, and earth will contaminate the water, means that more problem for the general population. I think for general population, this is the case where unfortunately, a lot of people are also facing challenges now. Okay, especially in other parts of the world. Maybe in this part of the world is still under control. Okay, then okay, and also another thing, water also represents tourism. And we can see from here in July, in June itself already triggered so many incidents. Some of these are from tourists and all these things, and some of the places are not very safe. I would really advise that try to avoid traveling because the world is getting very unsafe now. Okay. And this month, July's hexagram is number 46. Is growth. Growth means that this is actually this is a kuntua, this is an earth, okay. And here is actually the wind, or it has a wood. It's a wood element. This is a wood element, and a progress means that a slow growth of progress. That means that you can see the seeds, the wood itself will try to push through the earth to come out. Okay, so you can see that countries are trying to exert their influences, elevate their influences upwards. Okay, and competitiveness as well. You see the intensity of both US and China in this area, and also increase.
Evelyn, if I may interject, I think what you show in the Ligua is also quite meaningful in a sense that if we assume that the top part is the US dollar hegemony, but on the southern side, there's a lot of the global south movement is trying to push through the US dollar hegemony. So they are gathering strength and trying to break the influence of the US dollar in trade and in finance.
Yeah, that's right. Especially now, US dollars at all-time high. It's actually a bit risky. So we already know that currently the inflation is contributed by overprinting of money, oversupply of money. So the US dollars that high, whether it really has that value or not is another question. Be careful of what you look at, especially those in the forex. And then economic imbalance and social tensions will happen. Overextension and excessive risk-taking also will also happen. And then there will be a resource constraint in raw material, in energy, and in water. Okay. And also economic crisis, geopolitical tensions, and trade disputes will still continue in this format. Okay. Although we say that it's growth, but the hexagram of growth always comes. Every hexagram is positive and negative. So in this, the positive is that if the growth is actually good, but in terms of the growth is imbalance, it will create all these problems, resources constraint, and also economic crisis as well. When you have resources constraints, then it will have a ripple effect of economic crisis. All these are actually, one effect brings to another. Okay, any questions so far on the Chinese astrology parts? Let me check any questions. Okay, yes. So yeah, so far no questions. So if there's no further questions, let's pass it over to PC on his research on the global trend to check whether it fits with the narration here on the Chinese astrology as well. So over to you, PC. You want to use your own, this one, your own presentation? Okay.
Yeah.
Can I will just stop sharing.
Okay. So so let's talk a bit about June, what actually happened. So last month we mentioned that because of the debt ceiling, it will be beneficial for gold because that means printing more US dollar. But what we see instead is that throughout June, even from May itself, there were heavy selling of gold futures by the bullion banks. Okay, and that is something which I sort of think that it could happen, but because the US government need to secure about 1.4 trillion in funding over the next towards the end of the year. I anticipated that perhaps it would be very bullish for gold, but it did not happen. What happened was that the bullion banks sold even more gold futures to liquidate all the long positions. That is the only way the bullion banks know how to react to cut down their net short exposure. And as of last week, they are still sitting at a net loss position of 31.3 billion. So it was very, it has been difficult for the bullion banks to really exit, because normally under such circumstances, if we look back about 5 years ago, that kind of heavy selling could easily bring gold down by about $200 to $300. But despite all this excessive selling, it was well absorbed by the bullion bank, by the central banks. Okay, so still gold didn't fall too much, except that from about, it fell about $100 or so. So bullion banks still are aggressively shorting the market. And the US stock market remained buoyant despite the treasury market needing to fill its coffers. So the liquidity drain has yet to impact the stock market. And I think that probably we are going to see more liquidity being drained from the market in the coming months. So on the geopolitical front, although there were talks of sending F-16s to Ukraine, that has yet to materialize. So these three things which we forecast that could happen, but then the balance of the market action and so was to the opposite. But where we got right was that we mentioned that the risk of a US recession remains high, and the St. Louis Fed GDP nowcast puts the Q2 GDP at negative 0.46%. And this is, I can say that we can anticipate that Q2 GDP in the US is going to be very weak, because if we take into the year-on-year inflation, with the year-on-year increase in retail sales, the net impact is actually negative retail sales. Okay, so, and retail is consists about 70% of the US economy. So definitely I think Q2 is going to be very weak. So we also warned that consumers' loan delinquencies would rise, and then Moody's warned on 21 June that the consumer credit card and auto loan delinquencies are set to rise further as job market slows. So the CRE market saw further weakness. On 17 June, it was reported that the top US financial regulators are stepping up scrutiny on how exposed banks are to the CRE market. So the KRE ETF, which is a regional banks ETF, has seen its price fall 11.2% since the news broke out. So that means that the banking risk is still prevalent. It's just like it's using the analogy of the Li Gua. Okay, while on one side that is a positive development, if let's say we say the global South economy is trying to push against the US dollar hegemony, but if we look at it, it's like the bubbling banking crisis that has been kept below the surface is also gathering strength to burst above the surface, which is why I think that's the reason why the Fed decided to pause. A lot of owners, especially those who invested for the purpose of renting their houses or their apartments via Airbnb, they are now facing lower rental returns, because Airbnb also have some very bad news circling around, and people are not they are not preferring to have Airbnb. Some of them are moving back to the hotel, the normal hotel accommodation. So because of that, the rental revenue for a lot of apartment owners fall, and right now they need to pay higher mortgage costs, and on top of that, they are also facing inflation, which is a tax on their disposable income. So all these are coming into play, and that is why some owners will have to be forced to sell their properties, which also explain, the recent spate of foreclosures. So on the commercial real estate market, we see a lot of office buildings having vacancy, with San Francisco having the highest. I think it was more than 30%, and some other states they are facing around 20 to 30%. And for those kind of premises, if you have such a huge vacancies, the landlords are actually going to face a lot of financial difficulties. So there has been a spate of office buildings that are being sold at a discount of 30 to 40%. Those commercial real estate owners, they decide to sell it at a huge loss, rather than keep paying the loan. Because unlike the housing estate, where a lot of people lock in the low mortgage rate for 30 years, the CRE market, actually after the global financial crisis, a lot of them refinance their loans, for about 10 years at very low interest. But it's only very short period, because it cannot lock in for 30 period. They have a short period where most of them opted for about 10 years. So right now, that 10 years of low mortgage cost is expiring. So in the next few months, they have actually to renew that mortgage and pay at an interest rate that is very, very much higher. If we look at it during the period where the mortgage rate is around 2 to 3%, right now is 5%, it is easily almost paying double. And with falling with rising vacancies, you can see how that becomes a double whammy. So CRE market remains a major risk. So we mentioned that Europe's economy will see more pain ahead, and the EU is now in a recession. On China, we maintain that the CPI will remain low. China's CPI came in at 0.2% month-on-month, below the 0.3% expected. We highlighted that China's domestic tourism will ignite consumption. China retail sales rose 12.7% year-on-year. And this is in the month of May. In April, it rose about 18%. So if we look at China's overall year-on-year inflation, it is around 2 to 2.5%. Then you can see that China retail sales is actually net positive by close to 10 or slightly more than 10%. So in that case, China growth momentum will continue to, I wouldn't say strong, but will meet the official target. We also expected China's automotive sector to continue to flourish. And in the first 5 months of the year, China's commercial vehicle output rose 14.2% from the same period in 2022 to 1.63 million units, while the sales went up 13.7% to 1.62 million units. China foreign trade continued to grow as expected, rising 4.5% for the first 5 months of 2023, despite a slowdown in May, which hurt exports, suggesting that the global economy is also slowing down. So China is the number one trading nation of the world. And if, let's say, their export show a downturn in May, that means the entire global economy is also facing a slowdown. We projected that Chinese tech companies will fill the gap left by foreigners, and recently Imperium announced that it is ready to fully support 7 nanometer, while Huawei announced new EDA chip breakthrough. So this in particular were predicted in our book last year, that the sanctions will only drive, Chinese resolve to break the sanction shield that the US has imposed on them. So I think the next development that we will see a lot of progress would be in quantum computing. So let's look at the US economic indicators. CPI came in at 0.1%. Inflation is actually down. I wouldn't say inflation is down. Inflation is slowing down. Yeah. So it's only up 0.1% month on month in May. Year on year, it grew 4%. So I still believe that the fall in the CPI is due to the release of oil stocks from the SPR, the Strategic Petroleum Reserve, which has continued to see draining by the Biden admin in order to cap the rise in the price of oil. So if we look at it in the CPI report, the greatest fall, double-digit fall of inflation actually came from the energy sector. But if you look at it, core CPI came in at 0.4% month on month, and year on year, it grew 5.3%, showing that the core inflation remains very sticky. Now, the Fed wanted to push inflation down to, normally they use the core, to 2%. And at 5.3%, the Fed is still not being able to achieve it. That means the core inflation is very sticky, and it will continue to stay there. And if what happened in Canada happened in the US, then in the coming months, if the Fed continue to pause, then we will see inflation picking up again. Because what happened in Canada after their central bank stopped raising interest rate for 1 month, the following inflation report saw that inflation actually rebounded. Okay, so that is why I think the market is anticipating that the Fed will hike another 25 basis points in July. And there are two, the primary concern of the Fed here. Number one is that if they raise it any higher, then more of the bank's failure would incur. And if they don't raise it, the chances are inflation will continue to rebound back. And not forgetting that July is the period where the OPEC oil production cut really takes place. Yeah, so retail sales came in at, PPI came in at negative 0.3%, and year on year, it gained 1.1%. So this is the lowest in December 2020. Now, PPI is often, is actually manufacturing, yeah. And if let's say the price of energy is down, so the PPI is down because manufacturing all revolve around the energy consumption. So if the price of energy is down, the PPI would likely to come down as well. So retail sales came in at 0.3% month on month. Year on year, it gained 1.6%. So with CPI at 4%, retail sales after adjusting for inflation is actually in negative territory. The NAHB index went back into expansion at 55. Previous months, it was actually below 50, which actually signaled contraction. So the shortage of homes is giving the builders added confidence to build new homes, because you have to remember that a lot of people who lock in on a very low mortgage rate, they are not going to sell their homes and use the money to buy a new home, because that would require them to incur a much higher mortgage rate. So rather than that, they stick onto their existing homes and unwilling to sell. So when that happens, then it creates a vacuum. Okay, there's still demand for homes, but then, since the existing homeowners are unwilling to sell, it creates an opportunity for the builders to build new homes to meet the market demand. So in that case, housing starts jumped 21% month on month, and housing permits rose 5.2%. So existing home sales rose slightly, and probably because Evelyn mentioned just now that is rising foreclosures. So those that are financially hit would still be forced to sell their homes. Okay, so but year on year, it still fell 23.2%. Now, pending home sales was unchanged in April. Okay, year on year, it fell 22.6%. So let's look at the US leading indicators. Now, the leading indicator is one of the Fed favorites indicator to look at how the status of the economy is. And right now, the LEI, is showing that some serious trouble lays ahead. In fact, it has been continually been in a downward trend. If we look at the blue line here, okay, I think over more than 10 months, okay, if I recall correctly, it's a 14-month downtrend. So the LEI is often used as a gauge because it preceded the decline in the GDP. As you can see here, when it started to decline, okay, and then it went down steeply, the GDP actually went down soon after, okay. And as well in this case, it takes the lead first and then followed by the GDP. So likely we are going to see the GDP trending down as well. So the conference board are expecting a recession to hit in Q3 and will continue until Q2 of 2024. Now, that is based on the presumption that if there is a recession, the Fed will come in and cut interest rate or even do QE, okay, to push the market up. And this was how the Fed has behaved over the last few recessions. Every time there's a recession signal, then they will print more money, cut interest rate. But right now, inflation, previously inflation wasn't so high, but right now inflation is still high, especially core inflation. So if let's say the next time the Fed does this, the amount of QE that is needed to change the course of the recession will be many times higher than previous QEs, okay? And interest rate cuts would need to be very, very much deeper. And the market might not respond like it did last time because then everyone will be very fearful of inflation, okay? So that is why some economists are predicting that whatever the consequences, we are definitely on a very difficult, many years to a decade-long stagflation period, like what we experienced during the 1970s. So the other thing is that there's a rising bankruptcies, okay, and layoffs are actually increasing. So the year-to-date May bankruptcy filings of large US corporations have been the highest since 2010. Now, this is the year-to-date. And all this with the blue one is for including the rest of the year. So even at year-to-date May, it has reached this was the highest level since 2010. And 2010 was when just after the global financial crisis, the economy was recovering. And I believe that in the coming months, okay, we can see more bankruptcy filings because the higher interest rate is going to kill a lot of business, and it might actually be on par or if not exceed that of 2010, okay? So the other thing is, of course, as more corporations go under, then more people would lose their jobs. So auto loans of more than 90 days delinquent have risen to 4.55% of those from age 18 to 29, the highest since the global financial crisis. So sometimes in a bank, you don't need, certain deterioration of the assets. So in banks, loans are actually assets. So if let's say the delinquency have risen to 4.55, is considered very dangerous level. And we no need to expect, 10 or double digit delinquency before the bank goes under. Just if the percentage is high enough, then the bank would have a lot of problem, because the banks, if we understand how banks work, it is actually what they call sorry, the word just miss my thoughts. Yeah, so it's called fracturing reserve banking, something like this. For example, deposits, you pay 100,000. Okay, the banks, because of the reserve requirement ratio, they just keep 10,000. Okay, then they just keep 10%. Then that 100,000 that you deposit in the bank is able to leverage it 10 times. Okay, to give as housing loans, okay, or commercial loans and all those. So they can leverage that 100,000 to, let's say 1 million. If the reserve requirement ratio is just 5%, then they can actually, okay, leverage it up to double that amount to 2 million. Okay, so that's why small minute changes in percentage in a bank risk, yeah, it means a lot. Okay, they can really go under. So that is how the banks take deposits and make their loans. Okay, so you don't need double digit, high single digit, the bank can go under. So this is also a chart that's showing that once again, unemployment claims, okay, is trending up.
This also in line with our future, our upcoming book on 5 years into the future. So I think I think this is something I pre-launch sort of notification that we will be publishing a book 5 years into the future very soon, and we will have a look at all the economic sectors are based on the 5 element energies, how they perform, and just a little bit of sneak peek that metal, which is bank, could also have very, very major changes.
Yeah, I think that is also in line with the anticipation that more of them are converting to CBDCs.
Yeah.
So the other thing is that another risk is actually the household net worth, okay, which if we follow what the St. Louis Fed charts are showing, okay, again, when the housing net worth the household net worth starts to fall, then it also precedes inflation, recession. Okay, so right now it has fallen, and you can see that this was during the pandemic period, but right now it's falling deeper than that. So whatever the government pump in money to boost the household income or to give them free money, okay, it is not working and it's not sustainable. So what happened is that it is trending down. So because the household debt has reached the highest level as well, okay, and this is due to combination factor of high interest rate and mid rising inflation and negative real wages, because for the 26 months real wages have been negative after we deduct inflation. So on top of that, the household debt has reached the highest level on record. And last month we talked about households are actually sacrificing 1 meal in order to save enough to pay for their mortgage. Then we also shared that households are actually using credit card debt to pay their mortgages, which is really quite silly because credit card interest rate is about 20%, whereas the mortgage rate is just a few percent. But that goes to show how desperate the households are. When you use a much higher interest, like double or triple the interest to pay for the mortgage interest, then you're asking for trouble. That is why we are going to see a deep fall in consumption level among US consumers. So then there are more banks distress which are looming. Okay, now the commercial real estate debt maturity wall is likely to become an issue from 2023 to 2027. So this is the chart. You can see that over the next few years, okay, the amount of debt that they need to refinance is crazy. Okay, if we look at it, here is close to 400 billion. Here is 500 billion. Then it's more than 400 billion, 400 billion, more than 400 billion. If we look at it, let's say this four is average about 400 billion, that's 1.6 trillion. And if we add 500 billion, it's 2.1 trillion. Definitely it's going to be about 2.2 or 2.3 because certain parts here are actually in excess of 400 billion. So the commercial real estate is sitting on a close to 2.2 to 2.4 trillion time bomb. Okay, and if let's say any of them go into distress, then the regional banks would take a hit. Okay, so this is actually KRE. So what happened is that Janet Yellen recently said that more banks will probably look to merge this year. So the Fed is going to, with the Treasury Department, is going to force a lot of the regional banks to merge. And some people are actually speculating that the high interest rate is necessary to collapse a lot of banks, to force them into merger so that they become bigger banks, to allow the government to introduce CBDC. Okay, this is some speculation on one side. Okay, because when there are too many banks, it's very difficult to implement CBDC. But if let's say there are just several major banks controlling the entire US financial industry, then it's much easier to implement CBDC. So, of course, after Janet news broke, in 2 weeks, regional banks ETF, the KRE has fallen 11.2%. So, and this is why I believe that this is the reason why the Fed actually paused, because they want to reassess the risk to the regional banks. So the other thing is that trouble is ahead for the energy sector. Now, this chart, although is from 1965, okay, to 2019, we can rest assured that over the last 4 years into, let's say, to present right now, okay, if we added the 4 years, the trend will still remain the same. But this is a very good chart by Steve San Angelo, okay, from SRS Rocco. So here he showed that the oil production from 1965 to 2019, it increased 2.98 times. But global annual oil decline increased by 8.08 times if we were to take from the low here to here. And likelihood, okay, there will be more lost in annual oil production, because what happened was recently, over the last few years, a lot of the shale oil production has actually fallen off the cliff, okay? And right now, the only option right now is inject more chemical, okay, into squeezing more oil out from the rock structure. That means that goes to show that their production is not going to keep on expanding forever. Now, one oil analyst remarked that, you know, for every year, if we were to judge the amount of oil decline, you know, every year we need to find a reserve that has the quality of another Saudi Arabia. And the worst thing is, I think some months ago, I shared with you that global oil production has far exceeded the global oil discovery of new reserve. So, of course, some of you might say, hey, the ESG agenda is going to tip the balance into renewable energy. That is the narration that the people who want ESG to succeed is telling you. But if you look at it, Latin America and Africa, the people are very poor. The countries cannot afford to build renewable energy like nuclear, like solar farms, wind farms, because those are very costly. To them, coal and fossil fuel is still, like oil, is still the cheapest alternative. And this population in Latin America and Africa are actually growing exponentially. So that means the demand for oil will still be there.
Definitely. It's also projected in the future 20 years that there will still be a demand for oil because, as you said, the narration is only on one side. It focuses on one side of the population, which is, maybe in the West, the population is not growing as fast as those in other regions. So it does not take into the consideration of a global 360 degree views.
Yeah. And the thing is that because of this ESG agenda, banks are warned not to help finance the oil industry. So And right now you have even major oil companies that are moving towards renewable energy. So they are even spending less on oil exploration. So that is why Steve and Angelo predicted that earlier. He said that we will reach an energy cliff. Energy cliff means that at some point in time, the cost of extraction of oil will be so costly that oil price will have to be many times higher than present, simply because the cost of extraction of oil has become so expensive, because near surface oil is almost gone. So at first he predicted closer to 2030, but because of the craze towards renewable energy, he predicted that it will be closer to around 2025. Okay, because everyone is embarking on renewable energy. You see that demand for battery minerals, all these are going up, but then no one is saying that, hey, the mines that operate all this is mining all these resources, they have to use oil, because you cannot start a mining operation by building a solar farm and then have a fleet of EVs to go and do the mining, right? You need a cheap source of energy to start mining, get the minerals, and then ship the minerals out, for the battery minerals. So that is why whatever the agenda of the ESG says, you still need to fall back on oil as the cheapest form to extract resources. Okay, you cannot be, because you have a mine there, you spend even before you dig out the minerals, you spend tens of millions to more than 100 million just to build a solar farm or a wind farm to power your mining. Okay, so that is why the energy cliff suddenly has drawn closer. So here we can see that the increase in annual decline has actually outpaced production gain. And this affirms that the energy cliff, which we have discussed previously, is drawing closer. So what could happen in July? Now, OPEC oil production cut comes into effect in July, putting pressure on the oil price and further depletion of the SPR stocks as Biden admin tries to rein in the price. So it's like, a push and shove kind of thing. And, one side is trying to push, the other side is trying to pull. Okay. So I think, meanwhile, the SPR stock keeps on declining. And the SPR if I believe correctly, have released more than 200 million barrels of oil thus far. And if you imagine that if the Biden admin need to refill these 200 million barrels of oil, okay, it's like every day they will require 1 million more additional, just as OPEC, has declared they are going to cut. And I think there is going to be more pressure on the fossil fuel because of what is happening in Europe, which we will discuss afterwards. And I won't be surprised that Russia is going to punish the Western country by announcing that it will do another cut. So the intention of the whole scenario right now is that in order to avoid or in order to crush US dollar hegemony, they need to crush the US dollar. And in order to do that is to weaken the US financially, so that if they are weak financially and they have a lot of debt, so for your information, US government debt just exceeded 32 trillion, which just take 3 weeks to print 700 billion, okay, to bring the debt above 32 trillion. So if the US dollar is weakened, okay, there'll be high inflation, the US economy suffers, then they have to print more because they need to service the debt. In order to fight inflation, they also need to raise interest rate. But raising interest rate means that the US government need to pay an even higher interest. And the thing about the 700 billion that has been of US treasuries or US T-bills that are issued right now, they are very short term, which means that they are paying more than 5% interest for the debt. So if we look at it, this kind of refinancing at 5%, 32 trillion easily means about 1.6 trillion of debt payment interest. And the US tax revenue is just about 4.5. that means that it easily takes in more than 25% of the tax revenue to pay for interest service on that. So that is why right now OPEC is colluding with Russia in trying to push the more production cuts. And I think we won't see the last of it, okay? So because of this, Fed may put on hold further interest rate hike in July, citing risk to the economy. So this is why I think that the Fed will say, let's take a pause first. But should they hike? In fact, the market is anticipating more than 80% for a 25 basis point rise. If let's say this 20 basis point rise, okay, then that means that more companies will go under, more landlords will go under, and the US economy will go under as well, okay, because consumers will even stop or even reduce greatly their purchasing. So further weakness in the CRA market, putting regional banks at risk. This will soften the expectations of further interest rate hikes. Now, more retail outlets shutter across major US cities due to constant theft. You can see increase in bankruptcies and layoffs because of this. Now, because of the crazy law that they passed, if anyone that is robbing any outlet or stealing goods from an outlet that is not more than $950, you cannot go to jail. It will be treated as a misdemeanor. So what happened is that people just go into shops and rob the shops of their goods. Okay, so that's why a lot of San Francisco shopping belt is seeing a lot of vacancies, and that will actually put more distress on the CRE market. And one thing leads to another, and that's why you see that the US, despite all the homeless people, the opioid crisis, I think for those of you who haven't seen a video, please go to YouTube and key in Kensington Avenue in Philadelphia. There you can actually see real life zombies that are high on drugs, wandering in the streets, and a lot of homeless people on the streets. But the US can always squeeze in a few billion here to send to Ukraine. Okay, so that is actually the very foundation of an empire at its decline. So household delinquencies could rise even as household debt increases. Okay, now rising protests against the woke agenda and more violence on the street. The marketing orientation towards the dual agendas will result in many major companies facing tremendous losses. And Disney, Target, Disney, because of their woke agenda, they are likely to see a major loss. Target as well. Anheuser-Busch, which is the one that has a transgender person marketing the beer, and then it got constantly boycotted. Okay, so all this could see earnings taking a hit in Q2. So major tech companies are overpriced, could see pressure being built against their astronomical valuations. Now, for your information, the entire S&P has been driven just by 7 to 10 stocks. Okay, the rest actually are pretty much unchanged. So if you look at it, like Nvidia is more than 200 times PE. As long as they talk about AI, the share price just went higher. Okay, but then they actually experience a fall in revenue, and the rest goes for the other tech companies as well, because they experience loss in the revenue, but because they talk so much about AI, people just keep on putting their money into it. So because of this, the market, the S&P continue to trend higher, but it's just being led by 7 to 10 technology stocks. So I think people will reevaluate again, and especially if Q2, the earnings didn't come in as much as they anticipated. So let's look at the economic indicators in Europe. Now, EU is already in recession. The UK will shortly see recession as well. I just saw a report. I do not think it has signed into law, but UK is considering what they call UBI, Universal Basic Income. So which means everyone get free money. up to a certain level. And that will going to push the UK inflation even higher. And there are talks that UK might even be considering putting a price control on food items. Now, price control is never a good idea because it will lead to even more shortages. Why? Because if you put a control on the price, but the manufacturer that manufacture the food will continue to see inflation, right? So, but they cannot pass the cost to the consumer because it's capped. So what the manufacturers will do? Okay, we don't produce so much. We cut our costs down. Okay, we will produce because we are producing, we are not producing enough to help us offload the inflation because of the price control. So we produce less, or we decide to shut down since it's no longer profitable. So that will actually cause even more shortages of goods in the market. So that's why price control doesn't work. It is a fantasy that governments like to sell to get the people to continue to vote for them. So if price control were to work, what happened then is that the government need to subsidize. So if the government continue to subsidize, what will happen? The debt will continue to escalate. So that is the reason why sometimes price control will be to the detriment of a country's economy over the long term. Okay. So in Germany, the powerhouse of Europe's economy, and the UK continue to see rapid rise in bankruptcies. Now, Germany's bankruptcies have not risen to previous level, but if you look at it, starting ever since the Ukraine crisis, you can see how steeply it has risen. Okay, and the UK is even worse. Okay, UK has totally shot up, a much steeper slingshot. So Europe economies continue to suffer due to debt incurred to support Ukraine. Public debt to GDP, UK's public debt to GDP just surpassed 100%, and Germany looks vulnerable. Food prices will remain elevated due to the continent's misguided ESG agenda. US food inflation in May rose 15% year-on-year, while UK's food inflation rose 18.3%. Why I say misguided? They say that rearing cows are very bad for global warming. So Ireland decided to cull, I think, 200,000 cows, and Netherlands want to buy back 3,000 farms in order to reduce the amount of cows. Now, if you look at it, if the amount of cows that are reduced by the hundreds of thousands, what will happen? The price of dairy will go up, dairy products will go up. Okay, the price of cattle meat will actually go up, and that would even create more food inflation. So that is why, I often stress that the ESG agenda, while being good, can be taken into a fanatic kind of fervor, can become very fanatical, okay, and becomes very misguided then, okay. It's like everything they see is something to hammer it down, okay. So that is why, food inflation will continue to go up, and this will be disastrous, okay, to the economy. As I mentioned, UK is considering implementing food price control. So, and according to the Financial Times, Russia could shut off one of the remaining arteries carrying Russian gas to Europe by the end of next year when Ukraine's supply contract with Gazprom expires. Now, this will force Europe to expeditiously explore viable alternatives and could help drive the demand for renewable energy and fossil fuel alike. Because, you cannot just rely on renewable energy like what Europe did in 2021 to 2022. They rely a lot on renewable energy. But what happened was that there was lesser rain, so hydro energy output reduced, and it was mostly cloudy in Europe, and winter was extended. So the solar power solar power output actually fell, and because of the chilly weather, there were a lot of frost damage to the wind blades. So that's why wind energy also fell. And because of that, they suddenly have a shortage of gas that made worse because of the Russian-Ukraine war. And that's why we see gas prices spiking very high. And if, let's say, the contract to supply gas to Europe via Ukraine expired, then, there's going to be a rush, okay, to look at building more renewable energy that will drive the demand for minerals, and also fossil fuel like coal and oil may be preferred, because no country would like to see, okay, their entire population suffer a severe cold because there's not enough energy to keep the country warm. So that's why we could see gradual increase over the course of 18 months, where countries will actually bid for renewable energy materials as well as fossil fuel. So protests have spread to other parts of Europe, including Poland and Moldova, and recent protests have been against the woke agenda. So let's look at China. Now, CPI edged up 0.2% year-on-year in May, while core CPI came in at 0.6%. So year-on-year, China's inflation remained low versus its counterparts in US and Europe. So you can see that it's really very low. And one of the key things is because China is taking over Europe's market, okay, it's importing a lot of cheap fossil fuel from Russia instead. So PPI came down to negative 4.6% year-on-year in April, a further negative 1% percentage points decline from April. So retail sales came in at 12.7% year-on-year. Industrial output went up 3.5%, down 2.1 percentage point from April. Now, as I mentioned, because of exports is being hit, so that's why industrial output was similarly hit. So services sector rose 11.7%, 1.8 percentage point lower than April. So services sector wasn't so badly hit versus manufacturing, mainly because of the decline in export. So in the first 5 months, fixed asset investment rose 4% year-on-year to 18.88 trillion, with investment in infrastructure and manufacturing and services increasing 7.5% and 6%. Okay, so China's exports slumped 7.5% year-on-year in May, while imports contracted 4.5%. Now, there is a story behind here, which I will explain afterwards. Now, China's surveyed urban unemployment rate stood at 5.2% in May, unchanged from April. So, other takeaways is that PBOC cut interest rate by 10 basis points from 2.75% to 2.65%. China's economic planner said that stronger policy measures will be rolled out to encourage foreign investment further amid the country's efforts to expand its opening up. And not only that, I think the PBOC cut in interest rate is also to spur some investment in property. So total power use in China rose 7.4% year-on-year in May to 722.2 billion kilowatt hours. In the first 5 months of the year, China's power consumption topped 3.53 trillion kilowatt hours, up 5.2% year-on-year. So if we try to associate that the economy relies on energy consumption, then thus far, okay, in the first 5 months at 5.2%, this could indicate that that's where the GDP is heading. So in the first 5 months of the year, China's commercial vehicle output rose 14.2% from the same period to 1.63 million units, while sales went up 13.7% to 1.62 million. China will extend its preferential purchase tax policy for new energy vehicles to the end of 2027. So for those that are bought between 2024 and 2025, each passenger vehicle bought will enjoy up to 30,000 renminbi in tax exemption. For those that are bought between 2026 and 2027, it will be halved to 15,000 renminbi tax exemption. Now, this will continue to spur the development of NEVs in China. And that is why I think because of this encouragement, lithium price, which has fallen right now, is moving back up again. And, we have the entire cycle of battery related minerals performing better over the next few years. Now, during the March to April period, the output growth of polysilicon, silicon wafers, batteries, and components all exceeded 70% year-on-year, according to the ministry. So China's export of photovoltaic products surged 29.3% year-on-year to top 10.7 billion in the same period. Now, the other thing is that based on China's Q1 output, just on photovoltaic itself, it has surged 92% year-on-year, on target to double that of 2022. So if we look at photovoltaic, what are the main ingredients? Okay, again, it will be silver. Okay, the main one will be silver. And if we look at batteries, the main one will be lithium. And together, whether it's batteries or solar, at the end, all of them needs copper. Okay, so what will happen in China in June? Now, slowdown in exports in May suggests that the global economy is slowing down, and that means that China export to developed countries in Europe and US is also slowing down. However, this will be offset by growing trade with ASEAN and the Global South, further mitigating the decline. So I believe that in the coming months that we see more trades with increase, let's say in Central Asia, because China, Xi Jinping just met up with the 5 Central Asian countries, inked a lot of deals to start development, build industries and such. So I think there'll be exports of goods over there. And of course, trade with ASEAN is continuing to grow. And also the Global South, especially between China and Brazil, Chile, and Argentina. So that will actually help mitigate the slowdown that China is experiencing between Europe and US, because both of these major developed countries and blocs are actually slowing down. So China's lower imports could be related to the reduction in demand from the chip sector as China strives to increase its own chips production. So China's import doesn't mean that China consumption is very poor. China's is not able to import a lot because they can't afford it. So this is my counter argument, okay? Because they ban export of chips to China, therefore China import actually see a decrease. Also, China is importing more food from the Global South, which are actually cheaper than the US. And therefore, we could see continued decline in imports year-on-year in the months ahead as US trade deficit remaining high, even though the imports from the US is slowing down. So the other thing is that a lot of the trade between China, Global South, ASEAN, increasingly will be using local currencies. And because of the use in local currencies, it will also reduce the demand for US dollar. So that is also another strategy that is being undertaken, okay, by many Global South countries. So China power consumption suggests that its economy growth remains on track, and Q2 GDP would probably be significantly higher than Q1. China is becoming the global exporter and producer of auto vehicles. Could see many Chinese brands surpassing the established brands of Europe, US, and Japan, especially in the EV sector. So BYD is actually moving very strongly into Europe, okay, and I think they are going to introduce some models elsewhere as well. I think in the Middle East, something like that. Okay, and definitely BYD is now it's like opening the floodgates into ASEAN. And the other thing is that CATL is also heavily involved in a joint venture with Ford to build a battery plant to supply to Ford. And the thing is, this is such an irony because of the brainwashing of the Americans by previous president in saying that China is an enemy of the US, China steal US jobs and all those. When China decided to build a battery plant in, I think it was in Michigan, during the town hall meeting, the people say, I do not want any communist products in my state. Even though they are creating jobs, so that is how brainwashed they are. And this is going to be a constant challenge, okay, because of the demonizing of China in the US political scene, okay. It's not going to drive a lot of investment into US. So China's PV output is on track to double that of 2022, which will increase demand for silver massively. And silver continues to be drained from the COMEX, LBMA, and Shanghai Futures Exchange. So all this will lead to imbalances in the metal supply. Earlier, we talked about the imbalances in the oil sector. So let's look at the imbalances in the metal supply. So we could see the following: demand for lithium pushing up prices as large cap miners battle to secure the resource. Now, this is also made worse, okay, because of certain government policies, okay, especially in Mexico and in Chile. They have decided to say that lithium is a national asset and it should be managed by the by the government, okay. And Canada just declared that lithium is a national security asset. So that all this, they are actually pushing their own agenda. And that is why it can lead to a lot of imbalances in supply. So silver and copper being integral to EV and PV, PV means photovoltaic manufacturing, will increase in demand amid imbalances in the supply due to poorer grades, changing government policies, and weakness in the supply chain. So for example, weakness in the supply chain, COMEX has yet to deliver 2.48 million ounces of silver in June, with July being the active month for delivery. So, COMEX is now trying to find silver to be delivered, okay? And this 2.48 million ounces of silver supposed to be delivered almost 2 weeks ago, but I think they cannot find the physical, so that's why they are trying to short the precious metals massively in order to drive down the price so that they can buy the physical, okay? And of course, one good thing is that the Australian government just issued a policy governing the development of its resource industry. Now, this could hasten the development of Australia resource industry. And let's say if you're wondering if you are a global investor where you should put your money, okay, this policy will actually is already showing the light, okay, that Australia is going to hasten the development of its resource industry, but this is counteracted by global supply chain issues still facing a lot of suppliers because of nationalization of key mineral resources. For example, I said about Canada with regards to lithium, Mexico and Chile also with regards to lithium. So inevitably, the granting of leases and development of the industrial chain will be driven by political preference. Now, even in the Australian policy of governing its resource industry, they also say we should not rely on a single major buyer, which means that they should not just rely on China. Okay, so that means that if they could export a lot to China to help bring the overall global supply chain into balance, they are not going to supply as much to China. They want to find new markets. But where can you find a new market that has the industrial size of China? So what happened is that if Australia wouldn't be able to meet China's quota, China would actually buy from elsewhere, okay? So the thing is that because of this preference, okay, driven by political guidance and not to the most efficient producer, what we will see is we have duplication of industrial chains, which will cause further stress in the supply chain. So which means Canada can actually, let's say they have lithium, but Canada say I want to develop my own vertical industry. So I would buy the lithium internally, and then I would develop my battery business in Canada rather than sell to China. So what will that cause? Now, Canada is not has not been in the battery industry at all. But they are starting, if they want to start to build a new one, means they have to learn a lot of things. They have to.
Actually, they have been to the battery industries before, many years ago, but they are
Yeah.
not very successful. That
Yeah.
company is called E1 Molicel. They
Yeah.
tried to supply to Motorola. That's why in the end also they do not have the specialties to really expertise to really go into the, because mining battery minerals is one thing, but producing battery is another thing, even the supply chain and all this. And in line with what we have said earlier on, this year 2023 also, supply chain will be tight, and this is exactly is manifesting now right in front of us.
Yeah. So, if you are not an expert and you do not want to sell to the most experienced and efficient producer, it will just push the price of the of the batteries higher. And if let's say you do not have that expertise here and you are producing at a very costly price, you will also raise your price.
Yeah, so, and also another thing is that all the expertise needs many years to build. China, how they come up so fast, because they are buying expertise from Japan. Okay, CATL, when they first started, actually most of the people are from Panasonic. Believe me, I'm the insider in the industries. Yeah.
Okay. Yeah, I think is that what I think is that when you start duplicating supply chains where the world doesn't need so many supply chains, they just need to buy and sell from the most efficient producer, is definitely going to drive inflation up. Because everyone would need for an industry to succeed, you need to have cheap feedstock. Okay, if let's say there are so many duplications of industrial chain, what happens is that everyone also want to have cheap feedstock, so they will actually bid for more stocks from certain mines, and that will also cost the mining of the resource more expensively, because they need to really boost the demand, and overall it will just create more inefficiencies in the industry. So I think that is why when we see the globalization start, they call it the risking or decoupling, but everyone is trying to build from scratch their own entire ecosystem. It's not so easy, and that will actually result in a lot of wastage of resources as well.
Yeah, it's not easy to come up with one lithium battery plant. It's actually it's not easy at all. In fact, the Japanese, when I was auditing Japanese company for batteries, they treat it as a very top confidential. Only top customers can go in, because I happens to work in a company that that buys a lot from them. That's why we are treated like VIPs, to give them VIP tours to their manufacturing lines.
Yeah, and I share with you a story that why China excels so fast in the battery and all those, and why China is one of the primary movers into the EVs. Believe it or not, I read somewhere that during the 1990s, in a conversation, the father of Chinese nuclear energy, he's the one, I think, which defected from the US into China and helped develop China's aerospace industry. So he was sitting with a friend, then he sort of mentioned that the future is actually in batteries during the 1990s. And because that person is widely and highly regarded, China started on that venture. So that's why BYD, all this, BYD actually stands for Build Your Dreams. Yeah, I recently only found that out. So they started on all these from small batteries, and they move on into developing
the EVs
the
battery. Yeah, the EVs. They were selling laptop batteries, lithium batteries at that time. And their first plant, I've been there before. I do not know what to say. Compare is a far cry from what they have today. I've seen them for the 10 years, and I know their development very well.
Yeah. So it's like, they already when China wants to go on a single purpose journey, they will throw everything at it. Just like right now ASML is very concerned that China will come up with their own EUVs over the next 5 years. Now, 2 years ago, the CEO of ASML say, even if we give the Chinese the blueprint of the entire EUV machine, there's no way they can build it. So right now, he is starting to be worried because China suddenly see a surge of new companies listing that are dedicated to the semiconductor industry, from development of light sources to the development of lenses to the development
the
of the
lithography
software.
process. Yeah.
So it's like China is building all the building blocks to eventually merge into a EUV.
Yeah,
And
they will also acquire. Yeah, they will also acquire experience, expertise from Japan, from Korea to help them. I've seen this before in LCD, in batteries. So they are duplicating the same models to the EUVs, the same thing one.
Yeah, and I think if, let's say, Europe economy is in decline, I think they will pay the best salary to draw the talents from Europe also, into the industry.
I'm not surprised. Yes, that's right.
So, well, to continue, now let's look at lithium. Now, lithium actually fell to a low of 149,000 per ton on 25th April. But the moment that China emerges as the world #1 auto vehicle exporter, beating Japan, they are, the demand for lithium actually suddenly shot up. So I believe that because of the government policy, extending the tax exemption, then I think that the industry, will continue to flourish, and the demand for lithium would actually continue. One thing you must know that in solar farms, the solar farm do not just export to the national grid continually. At some times, what the solar plant does is that they will store the energy in
lithium.
In those huge batteries.
Yes,
they are stored there.
Yeah, in wind farm is also the same. So that's why they have very wide applications there.
Yeah, it's just not to EV and so on. So the more solar farms, there will be more batteries that are required for storage purposes.
Yeah.
So the other thing is copper. Now this shows that the 3 major exchanges, the COMEX, LME, and the Shanghai Futures Exchange, you can see that from a peak here, somewhere before mid of 2018, copper physical stock has been in a decline. So all 3 major exchanges saw dwindling supply of warehouse stocks due to poorer grades from major producers. So in fact, Chile, the major mining country where copper is concerned, they are also seeing poorer grades. So demand from EV and PE being the major source. The next cycle of demand will be the electrification of the infrastructure. So right now, with EU pushing the ESG agenda, there is a lot that they need to do in electrifying their infrastructure. But China is already overhauling its national grid. And China's national grid is in tens of thousands of kilometers, which is the world largest. And they are right now overhauling its entire grid with a smart and energy saving system. So that means another huge demand for copper as well. And some analysts are saying that copper will be so rare that it's going to be like the new gold. And I think our members actually received a notification from me, from Citibank, stating that they expect that the price of copper could rise as high as $7 per pound, which means likely double of the current price. And to just for you all to gauge, in some other research that I've done with Casey Lau's group here, for major producer, a 10-cent increase in price of copper could actually large producers here could actually result in additional cash flow of 44 million, believe it or not. Okay, just 10 cents. So if you imagine, if let's say copper were to double, okay, from right now, let's say it's $3.80. Let's say it goes all the way to it increased another $3. Okay, so $3 is like 30 times of 44 million. Now that means an increase, okay, of cash flow of more than $1 billion. Okay, and that is how big that is for the major producers. So that is why we have big companies like Barrick, a major gold and copper producer, right now searching for companies to take over, okay, with huge copper resources. Okay, so the other thing is silver. Now this is from the Shanghai Futures Exchange, and you can see that because of the demand from photovoltaic and EVs, you can see that the demand for silver, physical silver, have been so great that the physical stock, you know, is right now flatlining. So silver at the Shanghai Futures Exchange is now below 1,500 tons. Amount of silver at the COMEX is down 37.2% since the silver squeeze in 2021. Amount of silver in the LBMA is down 25.6% since the silver squeeze in 2021. But you know, you may say that, hey, you know, still a lot of percentage left, but most of the stocks at the COMEX and LBMA are held on behalf of silver ETFs. So which means, you know, it is those silver ETFs that buy physical stock and hold it in the LBMA and COMEX. But I think there's a lot of shenanigans behind the scenes whereby they borrow the stocks from the ETF and they sell it into the market to force the price down, then they buy back the stock. Okay, so this is what's happening. So let's, our last topic will be on geopolitics. Now, there's a lot of unanswered questions on the recent alleged coup by Wagner PMC in Russia. The coming weeks could see the true purpose of moves by Prigozhin, the Wagner CEO, Lukashenko, and Putin. Although Putin came out with a response yesterday that say that it was indeed, it's not a coup, but rather it was an armed mutiny, yeah, an insurrection. So Putin was saying that they do not attack the column of Wagner's soldiers like they could do if they want to, because they want to have lesser bloodshed and to come to a amicable solution. Okay, so that is why his last statement was those in the Wagner group that if they have not been a party to the insurrection, they can actually join the Ministry of Defense as Russian regular soldiers. And those that do not want to join, they can actually go back to their home. And those that that do not want to go back to their home or do not want to join the Ministry of Defense regular soldiers, they can actually move to Belarus. Okay, so that creates a lot of speculation. But I think coming period, we can still see some military top brass being removed and amassing of troops at the Belarus border, putting pressure on Kyiv. Now, this is what some of the analysts are expecting. But I think the removal of top military brass may be not done over the next few years, next few weeks, but rather over a longer term basis, where Putin may want to consolidate with insiders. Okay, so remains to be seen what happens along the border between Belarus and Ukraine. So we can also see that NATO getting increasingly agitated by the lack of progress by Ukraine's armed forces may see more doubling down of efforts to support the war, including utilizing East European nations' military personnel to support the war. Now, there's been a lot of talks about this, and Transnistria looks vulnerable. Transnistria is actually between Ukraine and Moldova, if I'm not wrong. So it is largely a majority are Russian-speaking people, and there is actually about 1,500 Russian army regulars in that area. So may see Moldova and Ukraine trying to attack Transnistria because if I remember correctly, there is an arms storage facility in Transnistria. And if let's say that happens, then we can see a wider war being spread into between Moldova, Transnistria, and Ukraine, which will actually push Russia to want to connect the land bridge between the Donbas area and Transnistria, which means that will result in the taking of Odessa, resulting in Ukraine being completely landlocked. Okay. So the other thing is that Modi's trip to US. Now, of course, there are a lot of people saying that, hey, you know, Modi is leaning towards US and all those. So the bigger question is, does Modi's trip to US signify a deeper strategic shift in India? But I think that knowing India as it is, India has always been very vocal about its own strategic interests. They have not committed to leaning to anywhere, although they have said that Russia has always been a great friend and often remind themselves that Russia was the country that supported them during a military standoff between Pakistan against the US and Britain during the 1970s. But I think the key highlight would be what happened in August will be whether India's preparedness to go in step with the BRICS de-dollarization objective or to step away from it, because that's when they will deliberate and announce their plans for the BRICS reserve currency. So if, let's say, India is doesn't support that move, then it means that India is prepared to align with the US. If let's say India is a keen participant, which I think it will, based on that India is also de-dollarizing its transactions, okay, with other countries, then I think India would just want to have US investing in India, and then also help to improve India's strategic well-being with regards to China. So the other thing is that about Blinken's trip to China, I think it is just a PR effort without any substantive changes in US policy towards China, okay? And right now, the US is hosting the DPP 2024 president candidate, you know, sharing with him how the US and Taiwan could integrate in a lot of policies regarding Taiwan. So that's why, you know, whatever the US says, you know, it always wind up and do the opposite. So there's nothing really to talk about the Blinken's trip to China. It's just for the sake of, you know, trying to forestall, okay, more aggressive Chinese move, okay, against the US. And the other thing is that I still believe that gold would be a major money that will be played across the geopolitical chessboard. And if we look at it, okay, these are all the countries which have been the biggest gold buyers over the last 12 years. And many of the countries have either expressed interest to join BRICS or already are BRICS members themselves. So Russia and China lead the pack in the amount of gold purchased. So you can see that Brazil is inside, India is inside, okay? Kazakhstan, Uzbekistan, Azerbaijan, all these are very Central and Eastern Europe. They are also consolidating their gold purchases. And Kazakhstan and Uzbekistan especially are part of the EAEU, the Eurasian Economic Union. Okay, Turkey is interested to join BRICS. Iraq is also benefiting from the BRI. Thailand has expressed interest to join BRICS. Egypt, and then Qatar and UAE are signing a lot of deals with China in the BRI. So we will see more cohesiveness of action among all these countries that are aligned with the BRI or with the BRICS. So and increasingly, all signs seems to point towards goal. And I think in August we will have a better picture.